This is the Hey Ed YouTube channel, and I am your host, moderator, and all-around nice guy, Edward Anderson. Okay, so I'm not a financial advisor. Don't construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your hard-earned money. Okay, so today I want to talk to you about what happened in the market yesterday. Okay, so yesterday the CPI number came out, and as it turns out, inflation is actually a problem. Whoa, surprise. And so on that news, the market sold off over 1,200 points. So it looks like the brainiacs on Wall Street are finally starting to learn what we already knew. Hey, listen, I worked on Wall Street for a long time, okay? And I can tell you that those multi-million-dollar analysts employed by these really large firms with prestigious titles, they're not as smart as you think they are, okay? They are perpetually wrong. These guys go to fancy schools to get fancy advanced degrees to learn how to be wrong. And they're very good at it. They're very good at being wrong. Okay, so you cannot take these guys after, you can't take their advice. Let's take a look at what happened in the market yesterday. Okay, so if you want to take a look at my other past videos, subscribe to my channel, and you see all of my past videos here. Just click on the videos button. All right, let's take a look at a couple of charts. All right, let's take a look at this guy first. Okay, so this bar here in the far right, this is what happened yesterday. Now, if you look back here, you see this was another 1,000-day sell-off right there, okay? The market sold off some more because of surprising news, right? The Wall Street was surprised, and then it put in, it looked like it put in some kind of a bottom here. And over the past week, it was trying to rally because there was rumors going up that Wall Street was saying that they think the inflation news has peaked, that the bad news was behind us. And so the market was feeling a little bold. So it had a nice little rally there. But then yesterday, the CPI came in at 8.3 instead of 8.1. And that was enough to rile the market. And look what happened, down another 1,200 points. So let's take a look at how this looks in the bigger scheme of things. All right, now here's the 2-year chart of the market. This is the next major, this red line here. So this red line here, this is the next major support level on the market. Around that 39, it's really like 29,500 level. Once it breaks that level, the next support is down here around the 26,500. I think that is where we're going to go. This is going to be broken, and this is going to be taken down. Remember that this whole move back here, this was all a sugar high on the Federal Reserve easy money policy. All right. But now it's over. Now they're starting to raise rates. And another point I want to make about yesterday's action. See all this that was happening here? That was computer driven. These, for the most part, these are not the retail investors. These are not you and me selling our stocks. The computers are taking over, the algorithm, they're called the algos, right? The algos are taking over. Now, this is an important little point to understand. There are computer programs out there that will take over at certain points because they look for certain support levels and resistance levels to be taken out. When they are, the computer sell programs kick in, or the buy programs kick in. All right. So when you see these really long stick down days or long stick up days, those are computer programs kicking in. All right. And when this next support level that I just showed you at around the 29,000 level in the market gets taken out, you're going to see computer programs kick in some more. And that's where you can get a really nasty sell-off. So be prepared. I mean, why would the market rally in here? The technicals are terrible, and the fundamentals are even bad. Okay, so you have inflation out of control. I mean, what happened, Mr. Biden? What happened, Mr. Administration? I mean, you told us that inflation was non-existent. Inflation was a fantasy. It was made up. It doesn't exist. These people are either really, really, really incompetent, or they have an agenda. And there's good arguments to be made for both. And I'll be talking about that in other videos about how I think this could very well be part of a bigger agenda leading us to the CBDC. But let's not go down that hole in this video. So let's talk about some of the fundamental reasons why this market is in trouble. Okay, so let's start with the obvious one. The CPI now has exceeded expectations for the 27th month in a row. And Wall Street is just now starting to figure out that inflation is an issue. I mean, we've known about this for a long time. Anybody who does any kind of grocery shopping, anybody who fills up their gas tank knows that inflation has been an issue for a long time. So 27 months in a row, the CPI has been larger than Wall Street expected. Next issue of grave concern. And I'm going to read this part, okay? So pardon me while I put my glasses on. Okay, so we have less than 50% of the heating oil and diesel fuel stocks that we usually have this time of year. The reserves of oil and gas for New England is down 50%. And for the entire East Coast, it's down 58%. And this is from the Energy Information Administration. Okay, so what I'd like you to do, if you don't mind, is in the comment section below, could you let me know what your energy bills are looking like month over month? Let me know what your increase has been like. I mean, last month, did you pay 200 and this month you paid 400? I'd be really curious to know. And so if you don't mind, in the comment section, let me know how your energy bills are looking. Okay, and then we have the whole issue of what's going on in Europe. Now, I've told you in my other videos that there's always a contagion effect. Whatever happens in Europe usually happens to us about 3 weeks to 4 weeks later. And right now, Europe is in the throes of a very desperate energy situation. Marching orders came down from the EU for everybody in Europe to keep their thermostat set at 19 degrees Celsius or less. That works out to about 66 degrees Fahrenheit for those of us in the States, right? That's pretty cold, okay? And they don't care whether you're elderly or whether you have health conditions. It's just an across-the-board order. Industry has been told to cut their energy use. So GDP is going to be affected, okay? It's all about energy and it's all about food, okay? Like Henry Kissinger once said, those who control the food and those who control the energy control you. And that's what they're doing. That's what this is about. This is a political thing. This is an ideology issue. All these issues are man-made. They're very fixable. But because of the Green New Deal crowd, okay, this is what our lives are going to look like. Anyway, so I don't know why Wall Street is so surprised that that inflation is an issue. So I think the market is going to go quite a bit lower. And as far as cryptos go, like Bitcoin and the rest, well, cryptos always move exponentially in the direction that the regular market is moving. Now, remember, the entire crypto space has a market value now of less than $1 trillion. That is tiny. And when you have that small of a market cap, you're easier to push around. You're more volatile, okay? So I think Bitcoin is going to be going lower. And as Bitcoin goes, so do the rest of the coin. Now, there are some really good opportunities inside the crypto space. And I talk about a couple of them inside of my Hey Ed WhatsApp group that are actually fighting the trend and they're going up. Remember that my theory of relativity? When you find things that are going up in the face of a down market, that's a bullish sign. Because if they can go up in a weak market, imagine what they will do when the market actually rallies, okay? So I do have a couple of really good ones. So if you want to hear about those things, send me an email and I'll send you a link to my WhatsApp group. You can join my WhatsApp group, which is a really great group of people. And one final commentary about market conditions right now. The reason why your stockbroker and your brokerage firm is perennially bullish is because they don't want you selling stuff. Because if you do, they're afraid they might lose your business. So Wall Street is in the business of keeping you pumped up or making excuses for why they're wrong. It's never their fault, right? There's always some reason that the street just doesn't really understand or appreciate, but they're smarter than the street. Remember, the market is always right. Never argue with the market. I just look at the chart. And if you go through my market commentary videos on my channel and look at them, you'll see I've been right the entire way. And I wasn't doing anything fancy. I just looked at the charts, okay? And I relied on my experience as a trader on Wall Street for a couple of decades, okay? So the things that I teach my students and the things that I cover in my trading tricks videos, you might want to check out my trading tricks videos. I've got a long list of little tricks of the trade when it comes to trading the market. You should check them out and learn a few things. Please give this video a like because it does help the algorithm. And please make a comment. And you might even want to share this with your friends. That's it for today. Edward Anderson signing out.
Copy that.